ever wondered why the market always goes against you? Many times after you've bought a share, then share prices started to drop. Is it because that the market doesn't like you? How do we overcome this situation then? M Plus Wiz, which alerts on potential entry for trending stocks, might do the trick for you. Is that all for the Wiz feature? Not at all. To find out more, please visit us at mplusonline.com/wiz. Have you ever wondered why the market always goes against you? Many times after you've bought a share, then share prices started to
Hello, good afternoon, everyone. My name is Louis, and I will be bringing you the WizEye highlights for today. And I think most of you would have been wondering what is the theme for today. And let's see in the trading platform and what can we pick up here. So if you go into these indices, you could actually at a glance know that what is happening in the market. And I will just pinpoint to 2 to 3 sectors that I'm actually monitoring right now. Firstly is the transportation and logistics. It has went up 1.18%. And secondly is this consumer products, which is having a good performance today, around 0.88%. And thirdly is on the healthcare sector. But if you notice that healthcare sector, normally when on the recovery play, people will not notice this sector. But later on, I will share with you why there are people, going into this section or this segment for now. But maybe we can drill down to this sector first, transportation and logistics. So over the weekend, we have the PM statement on if you have done you're fully vaccinated, then what is the SOP that you can go. So that is pointing towards a recovery play. And bear in mind, always we look at transportation and logistics as the recovery theme, because this sector is the core of the economy. So when people have started to move around and these people will commute more, first of all, using their own shipments or whatever, and manufacturing sector will start to recover, and they will start to ship their products as well. So most of these recovery theme would boils down to this transportation and logistics, because once you have products, you need to manufacture, you need to send it out, you need all these logistic companies. So you can take note of all this MISC, airport, freight, MMC Corp, all these companies are being tied towards the transportation and logistics. And one actually that has made a very, very good progress today is airport. If you take note of airport, how does it move? Okay, and why does it move? Because interstate travel is being approved, and people can come back from overseas, and airport is the one that benefit out of all this scenario. So that's why you can see since the start of the day, 590, it has went up strongly towards 615 and closed around 610 level. So airport is one of the main gist about the recovery theme. Other than that, I think most of them are shipping industry, MISC, freight forwarded, freight management holdings, Maybach. Maybach is very interesting. If you look into this BDI, okay, BDI is Baltic Dry Index that we always use to keep track of what is the catalyst for the Baltic Dry Index. For the dry shipping industry, dry bulk. So that's why this is very important. BDI index is the only catalyst I look for during if I want to trade, Maybach. This is the one that I use for. So right now it is trading at a 10-11 year high. This is a weekly chart, and it goes back towards 2010, which is the highest point at that point of time compared to right now. So this point is already higher than the 11-year high. So imagine this: if we are in the uptrend performance of this Baltic Dry Index, can you see early on that it can actually go up to 3,000, 4,000, 5,000, or even towards 10,000 US dollar level. So this is what, if the Baltic Dry Index going up so much higher, then it should perform as good in terms of Maybach's earnings. So let's see whether this can continue to climb higher to 4,000, 5,000, or even 10,000. Although it will be just a very blink, a very short span of time, maybe around 6 to 9 months period, but it should reflect into Maybach's earnings, and Maybach's share price should perform much better from that point. So that is the whole idea here. Then the other two sectors that basically is very, very clear cut will be the consumer products. Consumer products will be related to all these Guinness, Carlsberg, Heineken, and F&N, MSM. All these are recovery plays. And Mr. DIY is also recovery plays, because if they can open up their shops and people would buy more things at their shop, and that would be the idea. Genting and Genting Malaysia, they are in phase 2 already in Pahang, and therefore they are able to operate. So which means that people are really pinpointing towards all this recovery play, and Heineken, Carlsberg is also under the recovery play. So which means that people would spend more when they go out and have a dine in certain shops or whichever places. So those are the ideas on the recovery play. And why this healthcare sector is going up is actually due to IHH, KPJ, although Hata and Top Glove is also going up, but I would pinpoint towards IHH and KPJ. These two normally doesn't really move that much, but on these few days or these few weeks, people have been admitting to hospitals, such as because of cases so much higher compared to much earlier on, around 20,000 cases per day, and a lot of people would go instead going to government hospital, people would go to private hospital. So IHH and KPJ could be benefiting out of this situation of very high capacity being used up in the government hospital, so people tend to go to private hospitals. So that's why IHH and KPJ is performing well recently. TMC Life is also related to hospital, but maybe it is not as much as compared to IHH and KPJ. So this is just the idea of today, based just at a glance of what has happened in the market. We thought the technology stocks would also continue to perform, but instead people have been taking profit a little bit ahead of the holiday, and people are shifting their funds towards recovery theme instead of putting money again and again into technology stocks. Because last week itself, we did mention about technology stocks as one of the very strong performing sector, but seems like it is taking a pause right now, and we would position ourselves into recovery team or even the industrial products. Later on, I'll touch about industrial products because we have put in some companies under industrial products. Okay. So just going through our idea here, we believe that the tech counters should be sustainable, first of all. So that's why we put in ATA IMS, we put in KGB, we put in Penta, we put in Omasti. So these are some of the counters under tech stocks, and we put Complete. Complete is under the transportation and logistic companies, and we have put that into our list so that it should trigger. And the other one is Haptic. Haptic is under the steel related counter. It did perform quite well today, but it has hit some resistance point, and people start taking profit. Also, OWG is related to recovery play as well, because we think that the Genting related companies will go up, and OWG should follow through as well. So the other two counters is this G Faros. Yeah, so the other one counter is G Faros, that we think it is an alpha pick, because we saw some of the good performance on Friday. We thought that it can continue. So let's go through one by one. ATA IMS, where is it and how should it perform? Okay, this is has not ended yet. In my view, it can still continue to climb higher, because of this is the past 4 trading days of sideways move, and we need to really monitor closely on ATA IMS, because this is a very good case study of a very strong recovery position, and it moves sideways. We are going to monitor a breakout above 291. If it is able to break out above that level, then we can see further upside. So this is the idea today. This morning we put it in because they have performed 3 days of pullback, and today is the 4th day. I mean, today is just half a session, but if today is going to close around this level here, hold on to it. I think there is a chance on Wednesday itself, it should break out above the 291, targeting 307. The cut loss is around 2.77 ringgit level. Okay, Penta, it didn't really trigger us signal, but I think today itself, it has just moved sideways and didn't really trigger a breakout here. But it's all right. It's all right. I think we should maintain our view of positive sentiment, and because technology, like I said earlier on, much earlier on, we did manage to pick up the breakout and pullback and continuation pattern around 85. So right now it's just around the previous resistance point and taking some breather. But I think overall trend is quite sustainable towards the 100 points for technology stocks. So just hang on to some of the stocks. If they didn't trigger your turning point sell down position, you should hold on to it. Okay. And the other one is Omasti. Omasti is under the software related companies. The recovery happened along this way, 44 cents, then break out above 46 cents. It should continue to trade towards 51.5 cents level. If you turn into a 30-minute chart, it's just a gap up rally and sell down phase and sideways tone around this 48.5. So overall trend, I think, is still quite decent on OMSD. I would expect, in the near term, at least for today itself, this should be the lowest point, and it should not cross below the 48 cents level. But if it is crossing below 48 cents, then perhaps you have to reduce a position or even cut your position from this. Okay, so Complete Logistics is under the transportation and logistics. It has been performing quite well overall. It didn't really, sell down much lower, but instead it also didn't go up higher. So this is actually hovering within this triangle pattern here. So what I'm trying to tell you is that right now people are looking back into transportation and logistics because of the recovery theme, and it is trying to break out above this 1 ringgit and 40 cents level. But volume has been, the selling pressure has been coming in today, but it's all right. As long as it is still hovering above the 1 ringgit and 34 cents level, I'm still having a positive bias view on this, and it should hit around the previous high or previous trend line here around the 1 ringgit and 62 cents level. But first of all, it needs to cross above the 150. So given that scenario on over this Complete Logistics per heart, what we can do is that if it is falling below 134, then you have to cut loss. And if it is hovering above that level, continue to hold on to it. And our next target is around 150 towards 1 ringgit and 62 cents level on Complete Logistics. Okay. On the metal related company like Hyaptek, Malewa, Light Industry, Anju, all these are actually giving us good signals on Friday. And all these are related to recovery play as well, because these are part and parcel of construction sector. So construction sector is not really moving because I think most of the companies are just about to restart. But earnings wise, I think building material, because of this, you can see even in China itself, this is the steel sector. Steel sector, based on daily chart, it is still going up higher and higher, and it is still making a consolidation phase, which it has a very good chance of breaking new highs, or even just to retest the previous high around this level. So given that scenario in China is still quite positive, given that our local industry are actually performing in a recovery mode. So the steel related counters should be performing well over the next 1 to 2 quarters. So bear in mind, what we are trying to monitor here is the support around 52.5. If it is crossing below the 52.5 cents level, then we have to cut. But today itself, it has break out above the 54.5, traded to 57 cents. So that is around 6 ticks for us to trade today. But based on this formation here, ahead of the holiday tomorrow, it might continue to just sideways around 54.5 cents, and it could recover after the holiday, which is after on Wednesday onwards. So that is how I view Hyaptek for the time being. Okay, OWG, this is related to Genting, or the entertainment related sector. So given that Genting is expected to reopen or restarting all these operations going forward, we expect OWG to follow through as well. So the breakout happened last Friday above the 44 cents level. It has hit today's highest point around 47.5, but we expect the pullback will be mild, and then we should be seeing some good recovery thereafter. So next target will be around 48.5, 51, and also 55 cents level for OWG. So overall trend is quite decent, and we expect the recovery theme to sustain at least for the time being. If there is no further lockdowns or things like that, I think things are going to improve further from this point. So the other one that has triggered us is G Faros. So G Faros has breakout above the 51 cents level, but it did not really continue to move sideways, move down lower than the 50 cents level. So we shall take note of this, and second half of this session, I think it should have some good trading actions. So what I believe is that as long as today's volume is being absorbed well, and then second session there is a recovery position towards the intraday high position, you can actually hold on to it until Wednesday or even the week itself, and to sell later stage. Because if the selling pressure is already absorbed well and it is able to close at the highest point today, then it should be telling you that buying interest is in and sellers is already depleted, and we should be expecting further upside. So that is the whole idea and whole framework for today. So basically, we have seen a good number of sectors that has been moving, which is pointing towards recovery theme play. And what are the sectors to look at is transportation and consumer products. But thereafter, I think on Wednesday, moving into Wednesday, industrial products might come in. Then technology after the sell down or mild profit taking activities, people would also come back to technology, because this month is actually the reporting season month, and expecting a lot of good technology stocks to announce or registered very good profits in the second quarter. So that is where the optimism is coming in for technology sectors. Other than that, financial services will be neutral, property with neutral, plantation will depend solely on the ESG and also the CPO prices. Energy stocks will rely very much on the oil and gas, the crude oil prices. So let's see the oil and gas or crude oil prices. Where is it heading? And I've checked this morning. We have checked this morning, and we thought it shouldn't, go into our list, because it is actually forming a lower high and potentially going to lower low formation. So we shall maintain the view that if it is not able to cross and sustain above $70 mark, it should continue to stay sideways or pullback phase towards 64, 65 level. So if you are trading on oil and gas counters, make sure you always monitor what is happening in the crude oil prices. So Brent oil is the one that we are following, and right now is not making a good progress. Therefore, you can see that energy stock has been going down lower and lower. And other than that, utilities are up a bit. Telco and media, these two are basically dividend yield players, and utility players are always being defensive. So today people are being aggressive into other sectors. So that's why these two are actually making a milder move. Okay, REITs is also a defensive sector, so people are not really moving into that for now. So those sectors that is above all these 0.16%, 0.17%, 0.10%, that is the transportation, logistics, healthcare, and also consumer products and industrial products. So this is the sectors to look out for the next coming few days. Okay, so any questions you want to pose, just put inside the comment section and I will reply you in a moment. But before we go into the Q&A section, I want to also emphasize on, if you can't find counters that are within this these daily picks, you can always go to Traders List. Okay, Traders List will give you an idea that what we have put in over the past week, and it is still valid. Okay, it is still valid. So for instance, like for Tron is like building material segment counter. So this is also valid because it has made a very good progress earlier on around this 59-60 cents level. It has just hovering sideways along this level here. So we are still monitoring on this as a good pennant formation breakout, or you might want to call it a consolidation phase. So we are just monitoring when it should break out. So if you have already entered around today for this counter, then you have to set your cut loss point. Where is the cut loss point that you are looking at? So 60 cents perhaps it will be the cut loss position. If it is falling below this level, then you have to cut loss. So that is the whole idea here. Okay, so the other counter maybe you can want to look at is JF Tech. JF Tech has been just performing sideways and suddenly break out ahead, break out at 12:30, and it has given us a signal here. So what happened next is it should be a bullish move. So normally when it is nearing to closing or the first session break, when there is something like this, normally it's a good second half for you to monitor. So JF Tech should be performing well in the next section. And OWG, just now we mentioned this. Malewa is what we have set last week, and it has traded higher above 53 cents level towards 55.5, closing at the first session of 54.5. Tawin, it should be under the same theme as well, so it has triggered us around 11 a.m. So let's see on daily chart is a breakout. So this could be also taken as a good trading opportunity to target around 17 18 cents level for Tawin. And VS Industry, let's monitor this. The gap up position, pull back, and still sustainable, and hopefully that it can continue higher. And VS Industry also having some breakouts, but it has been hitting the resistance overall. So just look at the traders list just in case you don't have any ideas. But perhaps if you are looking into all this, you can always pinpoint to what are the sectors that we emphasize on today, and just select those counters that is quite related. Okay, so I will just go through some of the questions. I think it's those counters that is potentially good, and also having some good movements towards the second half. Okay, so I saw one is asking about comments on VS. Since that we are already touching on VS, maybe we can actually talk about this right now. Okay, so daily chart seems like still positive. It's just that today some mild profiting activities is going on. The recovery position has crossed above 144 and hit and rebound. And this is just mild profiting activities, and we should be taking much positive stance on this, and expect the next target should to arrive around 1 ring at 55 cents level, and further upside should be seen towards 1 ring at 60 cents. So overall chart pattern in terms of the technology counters or EMS players, they are quite similar, and expect the uptrend to sustain at least until the end of the reporting season. Okay, so this VS. The other questions that people ask is GUH. GUH, we did monitor this counter, and it has continued to sustain towards the 66.5 cents this morning, but volume has been quite quite strong today this morning, and we see some shadow here. So perhaps it should go into a consolidation phase right now. But one thing to take note is that it has been sustaining around 64 cents throughout the first session, and that is a good sign. Why do I say so? Is because it is able to, if it is able to hold on to this level and close at 5 p.m. Towards the 66-67 cents level, then that should be considered as a good opportunity to hold on to one more day. If you are having this, perhaps you want to monitor through the next session, and hopefully that you can continue to break out higher to target around 66-67 cents level at the end of the day. Okay, so this will be GUH. I think some other questions related to DNEX, and let's monitor this DNEX. I think it is very attractive to take note of all these top volume counters, and bear in mind they have also inked some contracts, overall long-term contract, and it should be turning well for them. One thing that I'm quite afraid of right now is that it is hitting the upward band for the triangle formation, so which means that potentially it should pull back. So overall chart pattern, it's decent. It is just hovering sideways along this symmetrical triangle formation. So if it is able to hold on to 77-78 cents level, then if there is pullback and then and recover to break out above the 84.5 cents level, then a very high chance that it should continue to retest the previous high around the 93 cents towards 105, or even higher, breaking out above this level here. So if you are using the triangle formation base, then when it breaks out above this level here, then your next mid to long term target will be around the 1 ring at 32 cents level. So overall, I would still give some good positive view on DNEX until it breaks below this 77 cents level. Then I should cut away my position. But as long as it is still hovering above this level, and it should continue to break out even higher from that point onwards. Okay, so the next is still in a positive tone, and I should monitor with you know moving forward. It should continue to stay and trend higher. Okay, because of the news flow is quite positive on them. Okay, so I may take a few more questions before I go into what are my ideas for the second half of this today. Okay, some question on PASTEC I think is quite interesting because I think there are something could be brewing on this counter, and this is a very decent trend line breakout. Let me check on the trend line here. Yep, it's a trend line breakout, and this is a downtrend wedge formation, which I think this has come to an end for the consolidation phase. So this is the first wave, it pulled back, and then right now is on the next upward wave. So the risk on this section is very, very low, and you can always accumulate along the 89-90 cents level, and your next target will be around 1 ringgit, 1 ringgit 10 cents and higher. So this could be seen as establishing a new uptrend formation, and you have to wait for the flat formation breakout, and you can hold on to it. And the next target on mid-term to long-term will be around 1 ringgit 40 cents to 1 ringgit 50 cents level. Okay, so under this recovery theme play, I think packaging industry are still one of the major industry that we always believe in. And someone is asking about Tiguan and also Muda. Let me check the chart whether is it still decent. So the chart pattern tells us that it is still downtrending mode, and it has broken below the support level here. So let's monitor this. I believe that the trend on the sentiment right now on Tiguan is slightly lower, it is slightly negative, and it should perform the sell down phase perhaps towards the 2 ringgit and 17 cents towards 2 ringgit and 26 cents level. So right now I think if you're holding on this company, perhaps you have to reduce some stakes or exposure in it, and the next target will be around 2 ringgit and 17 cents towards 2 ringgit and 26 cents. But unless it can break out above this level here, 2 ringgit and 55, then maybe you want to re-enter along that line. Okay, so the other questions on packaging industry is Muda. Muda, it seems like all right, but liquidity wise I think there is some issue here, because it is quite hard to trade on this kind of counters, because normally it is just range bound mode without significant volumes, but right now it seems like it's all right to monitor for a breakout. So if there is a breakout above the 2 ringgit 83 cents level, I would get on board to see further upside perhaps towards around the 3 ringgit level, or even previous high around the 3 ringgit 38 cents level. So this is considered as low risk zone for you to enter. Cut loss point is around 2 ringgit 74 cents. Target is around 3 ringgit level and 3 ringgit 38 cents. So I guess that would be it for the Q&A section. But I also would want to emphasize on a few counters that I believe that there are opportunities in it. So firstly is SEAL. This morning has a very good trend, and it has performed this. It's called the flag formation breakout today, this morning, and volume has been quite high, and as long as it is still hovering around this level and can continue sustain towards the ending around the 46.5 level, it should be considered as a good healthy uptrend move. Although before lunch it's trying to break out above the 46.5, but it see some selling pressure, but overall trend is still on positive side. So let's see on the second session whether does it break out and sustain above 47 towards 49 cents. That would be the greatest point that we want to monitor. Okay, so the other one would be IP Muda. IP Muda seems like having a good range bound mode, and then potentially breaking out of this zone here, 1 ring and 30 cents. So if there is a breakout above 1 ring and 30 cents, perhaps you can actually monitor on IP Muda. It is just turning sideways, and we shall monitor from this point onwards, 1 ring and 30 cents. If there is a breakout, I think there is a quite sustainable move over the near term. Okay, then the other one is Grid Tech. I think there is also some opportunity here, because you can see in technology stocks, most of them are actually on a pullback mode. But this Great Tech is having a breakout just ahead, such as JF Tech as well. So JF Tech and this counter Great Tech is quite similar. Just before the break, it has some push up pattern here. So that is why I think there is a second session move for JF Tech and also Great Tech. Great Tech is just moving sideways and then a breakout above 7 ringgit. This just before the break. So I think these are some of the counters that you can actually monitor. I think the next one is BIG. I'm thinking that all these counters are under the building material segment. Perhaps people are also trading on them as well. This is a good recovery position, bullish bar, move into sideways formation, 3 days. So this is certainly a good sideways formation that we are going to monitor, a flag formation breakout. So this is one of a counter that you can actually monitor for the breakout that could happen, or it may not, it may be, but there is a very good chance that this is forming a good healthy flag formation, and volume has started to pick up, and we'll try to monitor on the next half of today. So next target will be around the 1 ringgit and 90 cents, 99 cents level. Okay, so that will be it for today. So just a summary, a conclusion for what we have mentioned today on the highlights is that people are pointing their money, and the funds are flowing out from most of the previous very strong rally tech counter, and people are putting money into consumer sector, consumer products, transportation and logistics, and also industrial products, and also healthcare. So these are some of the sectors that we find funds are flowing in. And secondly is that the counters that we have actually mentioned is related to the theme that we are already putting in. So that's why tech counters still remain as a forefront, because they are only expecting a mild pullback today. But moving forward, earnings reporting season should come in very decent for them. So that's why we put in just ahead of the reporting season. Hopefully there is some good actions coming in. Other than that will be Haptic, which is building materials, transportation and logistics, recovery play. We have OWG and things like that. So these are some of the ideas of why we're putting in these counters for today. So I guess ahead of the public holiday, I guess everyone would be also taking profit in some counters. So if those counters are taking profit in the first session, but they are coming back in the second session, do take note of those counters, because those counters will continue to rally in Wednesday and also for the week itself. Okay, so I guess we have covered around 30-35 minutes for today on the WIS highlights, and hopefully you have good trading day ahead. Thank you so much, and thank you for your time. Bye bye.